I'm Elle Wu, a client portfolio manager here at Thornburg Investment Management. I'm sitting here today with Charlie Wilson, co-PM of the Emerging Market Equity Strategy. We'll be discussing why international and why emerging markets. Charlie, hi, how are you today?
Hi, good.
So I wanted to talk to you about why international and why emerging markets. We've heard this line many years now, like the rise of middle class, the structural opportunity in emerging markets, and I was hoping you could talk about why today is different and what's the setup for this year.
Yeah. Honestly, EM has been a frustrating part of the international investment landscape for the last few years. We've expected it to turn the corner quite a few times, but unfortunately we've had things that were sort of out of left field, like COVID or the US-China trade war, that really derailed the EM recovery in the latter part of last decade. But if you look at today, where we sit, there's a lot of the same driving forces that we were excited about a few years ago, like, for instance, the middle class, and we finally believe that there's enough money in enough people's pockets to really be an independent growth driver, so that EM's no longer reliant on global trade and fixed asset investment and commodity exporting, and it's really kind of shifting to be more of a domestically oriented story. Combined with that, we're seeing a period where, EM central banks have gotten ahead of the Fed in terms of raising rates, and inflation is starting to fall pretty dramatically across much of emerging markets. And so, the combination of falling interest rates, which could be, happening later this year for quite a few countries, combined with this, growing tailwind from the middle class development there, I think finally puts EM in a footing where it could really outperform. It really reminds me a lot of the early part of the 2000s, where you had slowing developed market growth and a period where US interest rates were rising, and you started to see emerging markets really pull away from the rest of the world in terms of their pace of growth. And I think that the setup feels very similar here. And if you remember, that was a period where emerging markets substantially outperformed developed markets, including the US.
That's very exciting. I mean, we've also seen what you've said with central banks play out in the currencies. So what is your expectations for the dollar this year?
It's hard to call currencies on a short-term basis, but definitely the fact that central banks have been so aggressive in raising rates has really given them some cushion as inflation starts to abate in those countries to start to cut rates. And I think that they can do that with maybe a little bit more comfort that they're not going to see currencies destabilize, especially if you're starting to see capital flow into those regions as economic growth really does continue to accelerate.
One exciting feature about emerging markets has also been the rise in tech and consumer. How has that played out in the indices, and how do you feel that impacts active management versus passive in the region?
Yeah, I mean, this is a trend that's been happening over the last decade. If you go back to the 2010, 11, 12 era, commodities, especially energy and materials, were nearly twice the size that they are today in terms of the overall index. Technology was much smaller at that point. Tencent was a company that was only tens of billions in market cap versus hundreds of billions of market cap today. And so the evolution of the last decade, going from being really driven by commodities, trade, fixed asset investment, to one that's more domestically oriented, consumer oriented, has really also led to a shift in how capital is allocated across EM. And you've started to see communication services, technology, consumer become more of an important aspect, financials as well, which is really, to us, another version of the consumer story. Those have all become much larger parts of the overall index, which, to us makes it a much more attractive opportunity because, frankly, it's very hard to differentiate, using our strong business process when we focus on the strongest companies of EM, when you're looking at a lot of commodity companies or companies that are maybe hard to differentiate from a global competitive perspective versus consumer technology or even financials. It's much easier to find interesting business models which are more attractive for investment opportunities.